Welcome back. In this one, I'm going to be going over the complete guide to trading the AM session. So everything I use from A to Z, from when I start my pre-market analysis to the 9:30 opening bell, all the way to profit taking at the end of the trade. Let's get down to it. So first things first, we always start with the economic calendar. This tells us when to anticipate volatility and gives us an overview of what is on the agenda for today and the coming week. So looking at today, November 25th, Monday, we see there's no high impact news. Generally, we like to trade days with high impact or medium impact news because generally we'll expect more volatility and clean, low resistance liquidity runs. However, when there's a Monday with no news, that's also telling you something. Generally on these days, the market will refer to what we call fair value, which would be your regular trading hours gap, which we'll get to in a moment, and new week opening gap. So when you have these time-based advantages based off the day of week and the economic calendar, that's you're able to put the probabilities of your trades through the roof. Next thing, right? Once we know what the economic calendar is, you must begin every session with top-down analysis. Again, if you have not already watched that video, it's one you definitely want to watch because it's what's going to give you the precision for everything else that you're looking to do. So a brief recap on top-down analysis. This is going to provide you a directional bias or a higher time frame draw on liquidity. This allows us to frame our lower time frame trades with precision, right? If we know what the higher time frame is doing, what it's reaching for, then it'll be much easier to trade a 1 minute, 15 second, 5 minute, whatever your entry time frame may be. Again, do keep in mind though, lower time frame and higher time frame is all relative. If you're a scalper, right, like you were taking a trade like I did this morning using the 15-second chart, well then the 15-minute is a higher time frame technically. I'm not making the case that the 15-minute is a higher time frame, but again, it's all relative to your trading style. If you're trading the 15-minute as your entry time frame, well then the daily or the hourly would be a higher time frame for you, right? So it's just all relative to your trading style. In my opinion, you want to zero in the time frames from the weekly all the way down to the 1 minute if you really want to drill in on the precision, but it's not necessary. So we use the daily time frame to frame our key levels for the session. So what PD arrays are we in close proximity to? And again, that's what I'm using the daily chart for. The 15-minute is used to frame the liquidity pools that the market will reprice to. So you'll see what that looks like visually, but this is always what I'm using my 15-minute for, because this is what's going to give high probability to the 5-minute and the 1 minute, and obviously the seconds timeframes. So before we get deeper into the specifics, this is the most important factor when trading smart money concepts. Most forget this fundamental concept, and this is why most fail. I was going to go right into the protocols, but I realized if I teach you the protocols, but you have the improper mindset, it's not going to matter. It's going to be just another pattern that you're going to look for in your charts. But if you understand the right mindset, then everything I teach you is going to work flawlessly. So that starts with liquidity, right? Liquidity is the lifeblood of the market, and the narrative must be understood for what I am sharing to be effective in your hands. And by narrative, I mean you must understand how liquidity is engineered, manipulated, and then ran against. Understanding liquidity is how smart money takes from the uninformed. And this is likely why you've been struggling to make these concepts work in your hands. Trading with smart money concepts involves finding the losing traders and attacking them. This is how the few take from the many in this business. So with that in mind, let's get into the protocols. Step number 1 on the 15-minute chart, right? Assuming you've already done your top-down analysis, you want to frame the obvious liquidity on the 15-minute, right? So pre-9:30 or pre-8:30, you want to frame where's the obvious lows and where's the obvious highs for buy side and sell side. With this liquidity, you're then going to wait for one side to get attacked, then look for a repricing to the opposing side. Meaning what you're going to do is wait for either the buy side or the sell side to get attacked first, and that's going to be helpful in determining what's the opposing side that the market is likely to run to. Step number 2, when you get to 9:30, after you've already marked out your liquidity on the 15-minute, you want to mark out the opening range gap right at 9:30. So that gap is going to be from where we settled the previous day to where we open at 9:30. And you're going to see how these quadrants are going to be extremely influential in your trading. And again, the regular trading hours gap will be used as a drawn liquidity, which just means a target. And it will be used to read order flow for the AM session. So once you have your liquidity marked, you get to 9:30, you mark out your regular trading hours. What next? So now step number 3, as you're watching the market at 9:30, you're going to allow for the 9:30 manipulation to engineer, manipulate, and trap retail traders on the wrong side of the market. So what does that look like? Well, we framed our buy side and our sell side. At 9:30, the market runs higher first. If we have smooth lows here and the buy side's been taken at 9:30, right? Time is very important. Then it raises the probability for the market to rotate to the other side of the liquidity. So this move against the true direction of the AM session allows for smart money to build positions in a deep premium. So I also wanted to show you guys the chart on regular trading hours. At 9:30, the market runs higher. We expect that. We wait for that to happen. Because if we've already framed out our buy side and our sell side, and they run the buy side first, we want to see them take it higher into a deeper premium. Because what that's going to allow for is, again, smart money to go short. And that's where we're going to look to take our short positions. Because again, for the few to make money, the majority have to be on the wrong side of the market, which is why at 9:30, we usually get a run against the true move. So this is not only how you avoid the manipulation, but you can anticipate it and trade in line with it. Last point, do not chase. At 9:30, the market's designed to get uninformed money in a rush, to take trades, to gamble right off the open. And that is absolutely not something we want to do. Wait at 9:30, be patient, let the market show you what it's going to do. So step number 4, it's 9:30, we've marked out our liquidity, we see the regular trading hours gap is below us, and the market's traded into buy side. And we see that here, right? The 15-minute high here. We have this swing high that forms before 9:30. 9:30 runs higher. So what we're going to wait for the trigger for step 4 to then look for an entry is we're going to wait for a rejection of the liquidity and a sudden energetic displacement. So what that means is the liquidity's been traded into here, the buy side, and then we want to see a rejection of that liquidity that's sudden and energetic. And that's what we refer to as a displacement. What I see this as above this high, this is retail trapped long in a breakout because they're chasing the run higher at 9:30 when there's all these equal lows down here. So they take it higher, they hold it above that high, that traps retail long. And then what you're waiting for is you're not chasing this run higher. You're going to wait for it to displace away and reject this high. And then here you can see on regular trading hours gap, the market runs higher, takes out that high that you can see here, and then we get a rejection of it. And then again, you always want to be mindful of the regular trading hours gap during the AM session. If you guys want a video on the regular trading hours gap and how I use that tool specifically, comment down below, and that's something I'll look to get in the works relatively soon. But you want to view this level as a draw for the market to want to trade down into that level. So now step 5, the entry. You've marked out your liquidity. The market's traded higher first at 9:30, very important. And now we have the opening range gap as a draw below us, and then we have sell side equal lows down here that the market's going to trade down into, right? Again, we never want to take an entry until we know where the market's drawing to. So going back to the entry, once the market trades higher, then we get that displacement away. That's the trigger. And then we can look to get our entry. So again, once the market has displaced away from the high, confirming traders are trapped long, you can use any premium level to sell short. So as you can see here, the market trades higher, clears out the buy side. It's held here. That's a fake bull flag for smart money distribution. While uninformed money sees the market trades higher, they want to chase that and then it consolidates. They're seeing that as a bull flag to go higher. Smart money is looking for lower prices because we had the regular trading hours gap below us. We have the 15-minute liquidity below us and also the new week opening gap, which you'll see in the execution that I'll include at the end of this video. So this whole execution that I'm using as an example here today, I did trade live this morning on Zoom, and you'll be able to see again how I use this real time for entries, managing a stop, all the way to taking partials. Again, everything that we teach, we use every single day on the right side of the charts. If most could teach with live examples, they would, but there's probably a reason they don't. So when the draw is understood, all entries will be effective. In this case, I use the bearish order block. So this up close candle, as it was trading up into it here, that's where I was selling short. And again, you'll see that in the execution with a live account. There was some joker in my comments saying that trading demo, and we'll go ahead and put that to rest with the live execution. One of the things I want to emphasize, if you guys remember the last video I uploaded last week on how to pick the correct or winning fair value gaps, same thing here. If you understand where the market's drawing to, every premium level will work. What's a premium level? Like a premium PD array, a fair value gap, a breaker, an inversion fair value gap, a traditional fair value gap, right? All levels that are going to send the market lower when it's bearish. So here we have the fair value gap. I missed that entry because again, this is a 15-second chart and obviously I'm live. So I'm having to call all this real time and trade it, which isn't very easy. So I wasn't able to get in that fair value gap. So I had to use the order block here as a close proximity entry. But again, look at the point that I'm making here. Every imbalance works when you know where the market's drawing to, right? Here we have a breaker. That works. Fair value gap, order block, fair value gap, inversion fair value gap. Every level that's a premium that you can sell short when the market's bearish, it all works, but you have to be aligned with time and price where the market is drawing to. So for step 6, take profit. So you want to cover your position or close your position at the liquidity that we framed on the 15-minute pre-market, right? So remember pre-market, we framed the buy side and the sell side. Now this is where that sell side is going to come in. Once you're short, you're going to look to take profits at that level. And I wanted to show the 15-minute again, because again, this is what's going to make the 1 minute and the 15-second are all my lower time frames high probability, because I understand what the higher time frame is drawing to. And in this case, the higher time frame is the 15-minute chart. So you're going to want to cover your position at very specific levels. The sell side liquidity that forms pre-market, which we can see here, here, and here. Any equal highs and lows formed after 7 a.m. That's going to be here. So here I have a line on 7 a.m. Pre-market, the algorithm will start to engineer liquidity ahead of 9:30 so that it can be manipulated, engineered, and ran against. What does that look like? Well, when they leave 1, 2, 3, 4, what does retail see? A quadruple bottom, and then it runs higher. So every retail trader has a sell stop there, and then they're expecting it to go higher because that's what the books tell them to do. We look to attack that logic because that's where the liquidity is going to be. That's where the money is to be taken today. So then at 9:30, when they shoot it higher, that engineers more sell side here and here. So you'll see in the live execution, I'm entering up here in a premium, and I'm taking partials at all these levels to pay the trader. So again, any equal highs or lows that form after 7 a.m., very important, because then the algorithm will start to engineer liquidity ahead of the 9:30 open. And then lastly, the regular trading hours gap quadrants. This is where these levels come into play, right? So we frame the regular trading hours gap. We wait for the manipulation at 9:30, and then we expect it to draw into that gap. So a partial could be upper quadrant or the upper 75%, 50%, that's where I took my profit, or you could even use the lower quadrant or a full closure. Don't always bank on a full closure. I would take partials at levels that make sense, like this low here, and the 50% of that gap, and that's more than enough to get paid over 100 points on a Monday with no news, which is fairly decent, right? So that's how you can use these levels to take partials and also to read order flow, right? Because if we displace through the high and we close below it, that's starting to give you confirmation that it's heavy. And then what do we do with the upper 75%? We also close down below it, signaling it's weak, it's heavy, and then closes below 50%, further confirming that it's weak, looking for lower prices. So you're going to use the levels that we framed pre-market going into 9:30. You're going to anticipate the setup, wait for everything to form, and then these are the levels that you're going to take profit at. And it's very systematic, and it forms every single week. So let's go ahead and recap everything we've looked at today and go over the steps one by one. So for step one, we're going to frame the liquidity on the 15-minute chart. Here we can see that's going to be that red line here and the green line above market price, because that's going to give us our buy side and our sell side to work with for the session. One, to see where they manipulate first, but then also to use as a target later on. Step two at 9:30, again, you want to mark the regular trading hours opening range gap. So we see at 9:30, we're opening here. The settlement price is down here. So we already expect a gap higher. And we expect the market to want to draw into that, especially on a Monday with no news. Step three, we wait for the 9:30 manipulation to the opposing side of the market, the Judas swing or the fake run. So for bearish, we have all these equal lows here. We have the new week opening gap, and we have the regular trading hours gap below market price. That's not enough. Wait for the market to manipulate first, because it has to get traders off sides. Traders that are buying the breakout, smart money is selling in a deep premium here too. So wait for the Judas swing. That's step three. For step four, we want to expect the market to trade quickly away from the manipulation. So once we get the manipulation here at 9:30, we want to see the market quickly trade away from that. Why? Because once the market takes out the buy stops, retail traders are now trapped long, smart money sold short. So they're going to be in a hurry to get it down to these levels so that they can take their profits from selling here and buying back here in a discount, because they're going to buy back the sell stops here. Right? So there's sell stops. Smart money is going to offer the counterparty and buy back below this sell side here and here. Step five, use a premium array like a order block, fair value gap, or inversion fair value gap to enter. On the 1 minute, you just have the inversion fair value gap here and here, this imbalance and this one. And you'll see, it's pretty neat in the live execution that you'll see real time before we even get down to these levels. I'm already annotating it as an inversion fair value gap. How do I know that? No, I'm not a time traveler. If I know the market's drawing down into these levels, then this fair value gap here is not a long. It's going to be used as inversion to go lower. And the same thing here. So that's really the only entry that was offered on the 1 minute on the run lower, which is why I went down into the 15-second to use a bearish order block to go short. And then for step six, you want to take profit at the liquidity framed on the 15-minute pre-market. Any equal highs or lows that formed after 7 a.m., that's going to be here. And then the regular trading hours gap quadrants, right? The gap higher as it's running down into that. Those are all levels that you want to take partials at or take profit as the market's running in your favor. So for my advice, for anybody who wants to seriously study what it is that I'm sharing here and become successful with it, you want to at least commit to studying this every day for 1 month. And you will see that easy opportunities occur every single week for you to take advantage of. All right, so you will now go into the recording of the live execution from the AM session using everything that I shared here. And now you have my full protocols for the morning session, what I show up to my desk and look for every single day. All right, so they left relatively equal lows here, here, and here with this large void of the new week opening gap. Will they want to work into that? We'll have to see. Right now, it is indicating it's extremely bullish. For those of you guys that have been here for a while, you guys know what we look for on Mondays. Generally, it's looking for the market to trade into the opening range, regular trading hours gap. And in addition to, if we have the new week opening gap in close proximity, then generally that would be a strong draw, especially for a Monday. Trump selected something with some financial position. I don't know any of the details, but that's why the market ran like that, or that's why they said it ran like that rather. So again, just an excuse for the general public to see why the market's moving. However, I do like to see how they are giving bullish narratives on the news, especially pre-market, because what we look for is going to be the market to trade down into the gap. So from where we closed to where we're opening, that's going to be a draw. I'm not calling for a full closure of the gap, but at least wanting to work down into that gap is something that we'll look for. All right, trading back down to the high of that daily fair value gap. I want to see how we trade there. If bullish, it should act as support. But if we start to trade through that down close candle, then that could indicate potential bearishness. All right, so I'm watching this up close candle here. I like how the bodies are stopping at 50%. And you see how the high, it touches the upper quadrant of that order block. I like how the bodies are staying below it. hitting the upper quadrant, displacing, indicating initial weakness. So is that going to be a bearish order block? These are the signatures I look for to confirm it. So I like how the bodies are stopping at mean threshold or 50% and starting to repel price lower. Turtle soup, order block, wait for a fair value gap breaker, always in that sequence. And we'll see if it runs for the sell side down here. All right, I'm in short. 15-second order block. So stop's just going to go above this candle here, and then we'll look to target the equal lows down here. At the first presented fair value gap, I'm going to look to buy 2 at limit at 50 handles. So at 50 handles, I'm going to take first partial. Prefer to see this imbalance here act as an inversion fair value gap. All right, like that. First partial. Inversion fair value gap, right? Not a long for us. Now we want to see him toast that sell side down here. Roll in the stop to better than break even. Worst case scenario, we make money. All right, so again, got the limit order down here below the sell side and midpoint of that gap. Let the markets do its thing. And let's let it play out. Trade the plan the trade. All right, so I'm going to manually close out there. That's good for me. They took it down below those lows, and bam. There's that 935 level. There's your mid gap. So let me go to regular trading hours here. There's your mid gap there. You guys like that, giving you that inversion fair value gap before we even traded below it? I know, it's pretty cool. Pretty cool. There's consequent encroachment. Look for lower quadrant and then a full gap fill, but I'm paid there. You should be as well. Thanks for watching. Hope this video was helpful. Let me know what more videos you'd like to see. I know many can only trade the PM session, so I was looking to do my PM session protocols for the next video. You guys let me know what you'd like to see, and we'll go ahead and make it happen. See you on the next one.